Well, good afternoon, everybody. This is Carl Streck. I'm one of the founders and CEO of Mountain Seed. I know we've got lots of Mountain Seed friends on the phone and as well as SageWorks friends. So I'm really excited about today's webinar. Many of you are familiar with the great works SageWorks has done. For those of you that don't know, SageWorks is one of the I think was founded as one of the largest sources of private company data, working with accounting firms early on, but today serves over 1,000 financial institutions in a variety of different ways. They've been a friend of Mountain Seed's for a number of years, so I'm excited to start this presentation on something that seems like is top of mind for lots of folks. So today I'm really excited to welcome Bryce from SageWorks. He's a senior credit risk consultant. He helps hundreds of financial institutions navigate implementation and configuration of lots of their internal solutions. Obviously has a background in technology consulting and is an expert in the space. So today's going to be a little bit different than some of our other presentations if you've been on them. It's going to be more of a conversation between Bryce and I on what's going on in the commercial loan process world, and I want to welcome everyone to ask questions in the question box. So feel free to ask questions along the way. We will pause to answer those questions in real time, and I'll also be asking Bryce some questions. He might be asking me some questions. But it should be a good conversation, and I hope you see value in it. So with that, I'm going to kick it off to Bryce and let him take it away for the first part of the conversation.
Awesome, thanks, Carl, and good afternoon to everyone. Definitely glad to be here, and it's a topic I think we could probably go on about for days. It's pretty near and dear to me. Guys, there's a pretty intriguing set of circumstances today. I really would argue it's kind of the landscape of the environment. Really three major things I would argue that are what we kind of like to call a perfect storm. And it's going on really at banks of all sizes, right? But primarily even more so in the community bank space, right? Where you're seeing folks anywhere really 10 billion and under, all the way down to your smallest of institutions. And there's three kind of critical crux points today. And I think the first of those, you guys will probably all agree, is that compliance is an ever-increasing cost and an ever-increasing risk. I don't think a day goes by where compliance gets less complicated or less costly, whether it be how you report, the data elements that you capture. And as complicated as commercial lending is, there's really only room for that to get worse, more so than better, which is kind of unfortunate for all of us. I think we would enjoy life to be a little bit easier, but in fact it is not. So what does that ultimately mean? As these regulations increase, not only in number, but in scope, those margins for error and the things that you have to report on really exponentially start to increase over time. And as you look back at some of the ways that we've done things, it is a little bit difficult for some folks to leverage, let's say, financial reporting, regulatory reporting in a meaningful way. But that compliance curve is really probably the first one that everyone feels, really, no matter who you are. Secondarily, if you look at competition, it manifests a little bit differently based on the types of institutions. But as you look at it, anything from local, regional, or even your kind of national mega banks, they're getting back to borrowers pretty quickly. They're offering pretty cut rates compared to maybe smaller banks. They just have kind of the bigger pockets, right? They have the tech advantage. They build their own solutions, and they're pretty aggressive. But those really aren't the only ones. As some of you guys may be experiencing, again, it's different for all. Alternative lenders, folks that are popping up in the space, originating loans and selling them off to other institutions. They're trying to get a piece of the pie. And the last one, I think that's one of the hottest topics really in the commercial lending landscape, is fintech. It's not just the commercial lending space, it's the consumer lending space. I don't think there's probably anyone on the call that hasn't seen Rocket Mortgage, right? That's a pretty big deal. How do we keep up and compete with that? So we've covered kind of compliance, we've covered competition. What is the last piece, kind of the last piece of the perfect storm that's all happening at the same time? And that's really the age of our borrowers is kind of decreasing. If you think to the last maybe 20 years or so, we've had a largely kind of baby boomer generation that have been running businesses, buying houses, really accounting for the vast majority of our loan production. Whereby now you see, Gen X, Gen Y, or the millennials, as some folks might call them, they're the ones that are buying houses. They're the ones that are starting businesses. The boomers don't really need to borrow money anymore. They're pretty well set. So it's not the demographics themselves. That's something that's always going to change, but it's really the expectations of those demographics. I'm sure there's probably some of you in the room that are in similar situations. I can only speak for myself, but in my experience, trying to get a loan just as recently as 6 months ago was kind of difficult. I needed to be physically present to pass over documents. I had to go into the branch. I'm not averse to those things, but I traveled for a living, and it was kind of difficult to be able to do that, or to have to rely on something as unsecure as email to pass documents back and forth. So really, those are pretty critical pieces if you guys think of the landscape of today and where we're going in the commercial lending space.
Yeah, that's right, Bryce. I mean, what resonates with me is, obviously all of these things, but as you mentioned, alternative lenders and fintech. We did a webinar with an alternative lender called Cabbage with a K, maybe about a year ago now, and I'm sure everybody on the call has one or many opinions about the success or failure of some of these platforms, whether it's Cabbage or Lending Club or Prosper, or the hundreds of others that have popped out. But I think the thing for all of us to keep in mind in the community regional bank space is that there is a demand for efficiency. There's a demand for consistency from the customer standpoint, and whether or not the alternative lending space is the place that people are going to find those things probably is yet to be seen. But I think the thing that all of us need to take notice of is that there is a growing customer base out there that has an expectation for efficiencies. And as your slide here depicts, Bryce, just because whether it's the age of the borrower, or just the expectation for efficiency, the compliance burden isn't going down, regardless of anybody's feeling on kind of repeal Dodd-Frank, replace any of this stuff. The compliance burden is at least staying constant, if not going up, while the expectation of the customers is continuing to grow. I think we've got a different issue on the appraisal side. While all of us serve the to some extent the customer and our regulators, on the appraisal side, we've got an interesting world where the average, I'm sure you probably know this, but the average age of the appraiser or environmental consultants is in the mid-60s. And so we've got an age of vendors that is getting older without a backfill of new young people into the industry. And so as demand for loans goes up or stays the same, and the availability of good service providers goes down, there's going to have to be some changes in how we do business, or else ultimately prices of services, collateral due diligence services, will go up, or the speed to which they're delivered will go down. And so those are all kind of issues that we can talk about today.
Well, that's definitely an interesting piece of feedback that you guys are actually running into, specifically seeing folks, almost aging out, right? It's kind of the same thing that we see in the in kind of the lending space, where folks are coming in to take over businesses because the actual business owners themselves are aging out and there was no clear succession. So that's interesting to see that paradigm kind of at the same time.
Yeah, totally. So so the agenda today, and Bryce will lead us through it. We're going to start with the old way, and the common challenges. Kind of how has the loan process, both the kind of from application to loan closing, including collateral due diligence. What's the old way, or for some folks on the call, it might be the kind of current state. Common challenges. We'll talk about what's available today, and innovations in the space. Want to be super thoughtful that and kind of throw this out there up front. This is not a commercial for any of our services. Folks that attend these things with us, we will be clear and transparent about what's really in the marketplace, regardless of whether we offer these things or not. But it's important to know what's going on today, what's available, what are the innovations, and then lastly, looking to the future. So there's some really cool stuff ahead that a lot of our clients are interested in, as Bryce mentioned. How to stay competitive with the larger banks, the larger lenders, or the smaller startups that are doing kind of disruptive things in the space. So Bryce, why don't you start us at the old way, common challenges of what you see every day. Kind of borrower walks into the bank.
It's funny. I'm sure this is going to sound like a broken record to some of the folks, and I can appreciate that. But I still talk about it every day because it's the reality. Think about it. It's like many jokes could have started out this way. A person walks into a bank, right? Well, what's going to happen? Obviously, they're going to meet with a lender if they're inquiring about funds, and that's never going to change. So before we go into anything else, I think, if anyone was taking notes, right, I would write that down, that regardless of anything we discuss today, the power of people is one of the biggest powers that you'll have, right? That is the difference in kind of the community and regional banking space as opposed to some of the mega banks. The reality is that you're in the community and you have the best service. That is the goal. So keep that in mind as we walk through these items today and think about how you can maybe perhaps enable those folks with some of let's just say, for example, some of the topics that we'll cover today. But so walking it back, somebody walks into a bank and they're requesting funds. The reality is there's going to be an application, which 99+% of the time is done on paper. That will inevitably lead to, let's say, a request for documents. We'll probably pull that off a checklist. The borrower, the lender are going to go back and forth, passing along these documents, or they're going to hand deliver, hopefully, all of them in a nice folder to the institution so they can begin underwriting. There will be the sign and release of a number of waivers or disclosures, if you will. And this is all a very manual process. As you think of it, we're still relying on paper documents, we're relying on ink, and the physical presence of the applicant or the borrower. So once we kind of scoot on from that, let's say we've acquired all the documents. Depending on the type of bank, if underwriting is centralized, we may have to then image those documents in order to email them over. I guess you could fax them, right? Or you could walk them to their desk, right? Any of these ways are all kind of acceptable and pretty well represented in the marketplace today. When you begin underwriting, there's going to be, maybe a point solution that someone utilizes, let's say for the purposes of cash flow spreading or producing maybe the key ratios or metric analysis necessary to be able to produce at least part of a risk rating, something that we're probably doing in a different system than we're spreading. It's probably in an Excel sheet. We're then going to kind of mishmash all of our data sources together into a Word document or something for the form of a credit presentation or a credit memo. We may wait a number of days to get this in front of the loan committee who physically sits at a table in their boardroom to go around and review these documents. Heaven forbid something not be present in the document that they need to decision that note, because now they're going to have to wait longer to get that decision. But once that's, let's say, completed, let's say we get the nod of approval, we're going really back down that same process of due diligence. And if there aren't technological solutions in place, it's a timing thing. It's how long does it take us to, let's say, acquire all the documents, do all the requisite background or analytical checks to perform get an appraisal and actually have that on record, and then proceed on to loan closing and the further, let's say, post-closing aspects of annual review. What's hard about this is if you guys really think about all of that, no matter what solution or set of solutions, if any, that you use for these processes, it is really difficult to know how long it took us objectively. It's really difficult to know what are the most painstaking parts of the process from a true analytical standpoint. And when it comes down to reporting, whatever we put into a paper file or maybe an imaged file in our doc storage system or the core itself, that's really where any and all of our reporting lives or dies. And we don't have really any insights about that process. That's kind of the big picture. If someone walks into a bank today, that's my abridged version.
Yeah, no, absolutely. I mean, and not too dissimilar. And I know we've called it the old way. I asked you when we were getting ready for the presentation, is it really the old way? Is it still going on? I think your answer was pretty resoundingly, yeah. Every day this is the world people are living in, which is probably why people called in. So I'm sure people on the call might be saying, hey guys, yeah, we get it. We've been doing it this way. Tell us what's next. But it's been working. I think to some extent, I think when the it ain't broke, don't fix it type mentality. And so why go through some of the pain of making a big change? Because we see the exact same things on the collateral due diligence side. One of the reasons I think SageWorks and Mountain Seed work well together is we kind of pick up where you guys leave off to some extent. But in the appraisal world, it's historically been somebody at the bank, whether pre Dodd-Frank, sometimes it was a lender, loan operations person, credit administrator, gets the go-ahead to begin due diligence. They'll have a list of appraisers they keep on their server that's in Excel, and the list might be big, and so they've got to figure out who is best for a given assignment, or the list might be small and they know off the top of their head. But and I've seen this in banks that are 50 million in assets and even 10 billion in assets, and so they'll look on the list and then they'll begin a series of outreach to appraisers or environmental scientists or whatever it is, property condition, to get bids on a commercial property, and then they're having to track, did the bids come back in? A lot of times the lender's calling saying, how much is it? And then you're delivering the bids back to the lender to pick the bidder based on time frame and price primarily, because everybody's pretty focused on appraisal independence at this point. But again, I mean, just more of the same of what you're talking about. People are using kind of Microsoft tools like Excel and Word and email and telephone and passing papers around, which has its own issues. I kind of outlined here, Bryce. One of the main things I think problems with the old way, and I think I'd be interested in hearing your thoughts, are really consistency. I put consistency, clarity, and compliance. So the old way, I think everybody had their own way of doing things, slightly different. Every in your world, Bryce, every lender might have a slightly different presentation for loan approval, or a slightly different engagement letter on an appraisal, and the way they coordinate that. Lack of clarity, so you can't see further into the process, and especially for the lender and the borrower. And then obviously compliance and reporting on the back end, really tough to track and manage some of these paper reports. So those are some of the big ones. On our end, what do you think is kind of the bigger issue with this old way of doing things?
Well, I think in the environment that we're in right now, I think the biggest issue if you think about just a competitive standpoint, is that it's just not that fast. You know, if I have to physically arrive to hand off a document, or if I have to physically arrive to sign something, that might be okay in a one-off circumstance when we're definitively like closing on a note, perhaps. But if I have to do that multiple times, the way that you mentioned, kind of the game of telephone, so to speak, that opens us up for an opportunity of loss of data every time, or a new interpretation of it. And if we're in a space where bigger banks, or perhaps the fintechs of the world, are offering something that's more convenient, people pay for convenience. It's just like, you know, you get on your cell phone today, and instead of ordering out somewhere and going to pick it up, you've got Uber Eats. They're happy to drop off food from any restaurant to you, and you'll pay a premium for that. And people pay for that convenience. And I think that if the bank space isn't keeping up with that borrower experience, that expectation, if you will, that's really the threat, right? The compliance thing we can figure out. The consistency thing, I think we can all figure out, but if we don't actually have the attraction or the desire from the people that are willing to spend that money, the people that want loans and want funding, we don't have a compliance or a consistency problem to solve, because we won't be in business. You know, I think that's really kind of the biggest piece of it.
Yeah, no, that's interesting. I mean, yeah, I think you bring up a good point that once you know something else is out there, then the rest of the marketplace has to rise to meet it, or else, you know, the customer's going to go somewhere else. So yeah, that's a really good point. And then from a compliance standpoint, I'm curious, you know, the kind of the older way of doing things. I mean, I can draw my own conclusions, but what have you seen as, you know, kind of from a risk management standpoint on the old way?
Oh man, so, you know, a pretty big amount of things, actually. There are a lot of pretty cool tools that are out there. I'm not going to call a lot of them out by name per se, just because I don't want anybody to think I'm endorsing any of them specifically. But there are a lot of really nifty tools. But the problem is that a lot of these tools are very driven towards just a regulation or two, which means you got to have 5 or 10 of them, and that's just not. Again, if you think about it from a macro level, like institutionally, if I want the visibility into my own portfolio and the way that I'm doing business, it's hard because I've got 5 extracts that I now have to figure out how to mash together on a pivot table at best. And obviously the inverse of that is if folks aren't using solutions, it's maybe at best what data fields can we push into our core and hopefully be able to spit out something meaningful. That then allows us to just manually fill out the registers or the forms that are needed to report on all of these regulations. I mean, that's what I've seen, is that it's just very largely disconnected.
Yep. Yeah, no, that makes sense. Okay, so as we've rehashed the old way, interested in kind of moving into you know, what's currently going on in your space. Obviously, there's current functionality, there's issues with that, but love to hear you talk through that a little bit.
Yeah, so I think the safe preface to kind of lead with this is I do talk to banks every week and sometimes every day that are all almost completely on the old way, so to speak, which is scary sometimes, but I understand why we got there and why we are where we are today. And I think maybe the greater whole of them, though, are really kind of in the middle of that old way and this current trends that we're going to talk about now. From our standpoint, just kind of speaking for us, SageWorks as a vendor, just, you know, from our technology standpoint, you know, not like a pitch, is that, you know, the idea is to keep things connected together. So, you know, if I have credit analysis and underwriting, it's being spoken to from an application that could be digital. Right, that's actually one of the biggest pieces, is focusing on that borrower experience, introducing to banks, credit unions, and financial institutions at large that, hey, CRMs are a thing. It's important to have them. It's nice to be able to have the insight into the pre-sales pipeline. And if you can leverage your CRM when it comes to the way that you're performing business applications, reporting up to management, and then the rest of your systems communicate, not only from an underwriting, but an approval. You have something to keep it all on rails, like a workflow, and then portfolio risk management tools. That really is the present state of things. And that's us as a company. And I think really anyone on the line probably does well know that there are a lot of other vendors out there that do one or multiple of those other things as well, right? That's kind of the current state, is that there has been a play to get some of these, let's say, traditional tasks done in a bit more efficient manner. Where I think the industry is still lacking quite a bit is cleaning up the borrower experience. We can make back office tools pretty quick and pretty efficient, but that borrower experience is still, I think, probably one of the bigger hot buttons. Is this still okay for the borrower, or does it look a lot like the same old story? It's just faster for us on the back end.
Yeah, interesting. I mean, and so back to the question on the old way, I'd be interested to know, in your mind, based on the currently available technology that's in the marketplace, technology, services, and all that stuff, what is the ideal borrower experience and back office? What should that process look like, if you can talk through it the same way you did on the last one? So, in today's world with innovation and current trends, I walk in to talk to my lender about a commercial real estate loan. What should I experience today in an ideal world?
Yeah, I think that there's definitely not a silver bullet to that answer. So I'm going to throw a couple different things out there. I think the real singular answer is flexibility. If that borrower wants to have a phone conversation with you, sure. From a regulation standpoint, you might have to physically see them and look at their ID and maybe get a wet signature at some point. And that's fine. You can get there when you need to get there. But we maybe don't have to pigeonhole that from the beginning, right? Being able to have a phone conversation or to be tech-enabled, meaning if I want to, let's say, have that conversation and then fill out my application in an electronic format, so I don't have to drop off paper to you or email to you. I can just log in and do it. That is something that's appealing, I think, to the demographic, per se, that's going to be applying to a lot of loans. That electronic format doesn't necessarily have to mean that it lives on your website, so to speak. I hear that a lot in the industry. Folks are a little bit pensive or nervous about maybe, allowing kind of this, I think they're afraid of this blast of loans to come in from their website. And truly, it's not always going to be the case if you do put it on your website. It's just the flexibility of giving the borrower the experience they want as opposed to forcing them into the branch. That's really kind of the paramount item number one. And I'll pause there, Carl, before we go any deeper. I don't know if you have any thoughts on that as well, or even just a personal perspective.
No, that's I think you bring up a good point, because we all want to find out the best way to serve our customers. Whether you're a banker on the phone, I know we have some other service providers on the phone, or you or I, and there's not a one size fits all solution. But I think that there are, as you pointed out, there's ways to be flexible as you're interfacing with the customer, and then there's ways to be efficient on the back end. And so if you do have that tech savvy person that walks in and they feel really comfortable with filling out an online application, and or maybe they don't want to come into a branch at all. You want to be able to serve that customer, and then if you have on the other side somebody that it feels uncomfortable with being online or interfacing that way, then you want to have that as well, but without sacrificing that efficiency, internal kind of back office efficiency. So yeah, that makes perfect sense.
Yeah, and you framing it that way, I mean, it really kind of tees up the next point almost perfectly. If you think about the process organically, is okay. So regardless of the medium, whether they came in via the web or we gave them access manually, meaning it's something we opened up to them so they could just digitally fill out an application. Doesn't mean they have to do it online. They could do it in the branch on our computer, right? It just saves them from actually having to write things out and such. It's the same process, really. The key is that what we're doing there is we're condensing it into the same space. And what I mean by the same space, and all you guys know this, is that it really anything, whether it's Excel or just a server itself, right? We're databasing. And if we're databasing these application pieces, if we're databasing these bits of information that are going to have to get chewed up, reused, and recycled somewhere between the low side of 3 to 4 times, on the high side of maybe 12 to 15 times if we end up booking this loan, it's nice to be able to do that in a system that isn't going to ask us for that piece of data every time we need it. That's kind of the idea here, is to be able to look and say, okay, how can I meet the borrower in a way that they feel is flexible enough to them, but also serve myself well enough on the back end to not have to redundantly do the same task 3 to 5 times, because that's not going to help you. It may help you get their attention, but it won't help you turn things around faster or make your life any easier, kind of pinning back on the initial topics that Carl had outlined, consistency, clarity, and compliance. And it's hard to achieve any of those 3 things if we're repeating the same tasks over and over again.
Yeah, exactly. And so what are some of the biggest, obviously we identified some points of waste in the prior slide, but in this new world, what are some of the biggest kind of outcomes and benefits that you've heard from your clients or in the industry? Hey, in the old world we did this, now we're doing this, and our life is much better because fill in the blank.
Yeah, I think it tends to really 2 things. I mean, speaking from my experience on kind of the automation and the kind of the digitizing things side, is there are a couple different features, and I don't even want to call them out by name, right, because I don't want to sound like an infomercial, but being able to leverage automation in underwriting or the application phase is something that I could point folks in the direction of banks that are the ones that told me, hey, we decisioned a loan in a day. And it wasn't like it took us 2 weeks to get up to that point, and then on that one day we made a decision. It's that we started this request in the morning, and by the afternoon we had a decision. We were ready to proceed on due diligence at that point. That's powerful stuff.
Yeah. And the way that they're able to speed it up from a number of days to 1 day, how are they able to do that? What are the pieces of delay in the process that were eliminated?
Yeah, so kind of in the framework of how we've done things, either leveraging the digital application. It doesn't have to live on the website, right? The bankers can actually open it up to them, whether it's on their own computer, like they're sitting in front of the borrower, or they just send them an email to let them register and do it. But that streamlined the entire document collection process because their policy lives behind the application, so they don't have to flip through forms, call the customer back, kind of do the whole back and forth thing. It's just fill out what you need. We've got you covered on everything else. You hit the next tab over, and it's asking you for all your documents, and here's the safe, secure place to upload them. When we've got what we need, this same system can push directly to underwriting. So, an analyst gets a notification from a workflow system that says, hey, you're up to bat. Here's all the documents. Here's all the information on the borrower. Perform your underwriting and your analytics. Through the same vein, the tool offers them, the capabilities to, again, leverage all that data in a more automated way for a credit presentation. These are those hours that aren't, it's not that it's like hard stuff, it's just time consuming. These pieces of automation are what allowed them to turn it around so much faster and to be able to say, okay, we didn't actually have to do all the work to put these things together. Rather, we focused on the customer, made sure they had their hand held through the process, so we got what we needed, which were the documents and the data. Our experts went to work, performed the underwriting, and made sure everything was kosher, so that all of our board or our committee could approve on this particular note. And they leveraged automation again for forms and templates, things they would typically generate without having to, get in their computer and fill it back out or write in the answers. It were things that they could leverage because they've already kind of input these data elements, whether it was them or the borrower, right? I would say big picture, they're leveraging the borrower to do some of the work, and they're leveraging technology to do the work. They're just kind of the experts that are flipping the switches and pulling the strings, if that makes sense.
Yeah, no, that's great. I mean, what comes to mind is the kind of business writer Peter Drucker talks about operating in your highest level of contribution in whatever you do in your organization. And so for all the folks on the call, I mean, I think that always resonates for me is how do we get our people operating in their highest level of contribution? So, if you're an underwriter, in an ideal world, you would be using the skills that you have to underwrite loans 100% of the time. If you're a lender or a salesperson, you'd be using those skills 100% of the time. But so often in all of our worlds, it's involved with doing administration and walking files down the hall, or sending emails, and then somebody's on vacation and you got to wait because you didn't know they were on vacation. And so it A, creates waste, and B, we find ourselves doing things that aren't, as I referenced earlier, in our highest level of contribution. So, makes perfect sense. I think all of us because I know a lot of people on the call are leaders in your organizations. I think that's what resonates most on this topic for me, and why I'm so excited about it is, I think we all are trying to do in today's world more with less. So more regulations, more loans, more growth, but less people and less budget, and all those things. And so, ways to do that are to look in our process and try to find any time that somebody's not operating in their highest level of contribution. So clearly in the loan process, there's plenty of that. I think, in the collateral due diligence side, we see a very similar thing. So current trends and innovations, and there's really a handful that exist in the marketplace. So, amongst the group of folks that we talk to here, you've got folks that have an internal appraisal department, on the larger bank side, to some extent. You've got folks that use a third-party kind of management company. You've got folks that do a process internally, the old way, quote, the way that we referenced earlier. But today in this world, I think that there are technology solutions available to all those people. So if you have an internal process, there are technology providers that will help you with, even interfacing with some of the workflow providers like SageWorks and others, interfacing with those to eliminate duplicate data entry into an appraisal request or an environmental request. There's currently available in the world today is data around appraisers in the marketplace or environmental scientists to help select and engage and bid to through an automated process, or even some automated on the technology side, and then on the other side, professional service providers that can select and bid to appraisers, collect those bids, and in an automated fashion send them back to whoever initiated the request. And then, that can flow all the way through to delivery of the reports, whatever reports they are, and put back into the workflow system. So, so back to that comment, making sure that all of our people in every organization are operating at their highest level of contribution. One way is thinking about what processes have could be automated, or could be need to have relevant experts. And there's, obviously in the current state, plenty of those things available. But I think, this current world is a world of let's make sure that everybody's doing what they're best at. So, one of my questions, Bryce, is what are the main reasons for people kind of staying in that old world and being hesitant to the stuff you're talking about that's currently available in the marketplace?
Yeah, it's a good question. There's a couple different things. Again, not every institution's the same, so these may not apply to everyone. I would say one of them that I hear with some level of frequency, just given the nature of the company that I work for, is folks have bought solutions in the past and it just didn't work out. There's some hesitancy, to undertake a new vendor or to try something else because, as a banker, assessing and kind of understanding software or technology isn't maybe your native first and foremost forte. Just exactly to Carl's point, it's like, hey, we want to operate within our highest level of efficiency in the things that we're expert at. So I think there's some hesitancy, Carl, in just maybe understanding what the technology is capable of doing, or just being kind of burnt in the past by another provider. Some of the other ones I think is time and change management. A lot of times organizations that I've come across, they're experts at what they do and they're really good at it. But introducing kind of large scale change management into their organization is maybe not something that they have really any kind of organic experience in. So I see some of those as hesitance outside of the obvious stuff, like, well, clearly it costs money, right? I mean, everybody knows that. That can be a hurdle. But I think typically the change management and some of the prior experiences, lack of understanding, those are some of the bigger ones that I've seen.
Yeah, no, that's good stuff. Well, want to, obviously, part of the point is, like, where are we headed? So, obviously in your world and my world, we see lots of things on the horizon that don't exist. We'll not too blue ocean, but tell me, in all the things that we've talked about, and all the cool stuff that's available to drive efficiency in the borrower experience, and all that, what's next?
Yeah, so, today we've done a pretty good job, or at least here, right? We've done a pretty good job of connecting all of our solutions together, right? You build them all in-house and make sure that they communicate with one another. So that being maybe kind of the ideal present and creeping into the future state, all things being connected and communicating. So with that as a foundation, where are we going? Where are we really going? I would say data and analytics are pretty commonly cited as the number one most valuable resources nowadays. If you read industry articles, regardless of whether it's banking or manufacturing, retail, everybody says data is the number one resource. Where we're going is a more analytics-focused space. And what's going to enable analytics? What's going to enable data? You're going to see a lot more integration. You're going to see companies like SageWorks or any others, just even Mountain Seed, right, developing technological interfaces where they can communicate data between each other in a more rapid press of a button or automated fashion, so that we're not waiting. We're not waiting for data to come back from the IRS because it takes a week. We're trying to leverage all of these individual entities and companies that have done a great job amassing this information to make things faster. So that's really one of the key spaces. But I think, too, in this industry, Carl, I don't know how fast everyone's going to get there. I can only speak for my observations, and there are some folks that are really chugging along full steam and some that this is still a very foreign concept to. Which is really bringing all the different organizational silos together. Is my ALM and my finance committee, is my lending group, is my credit risk group, are they talking to and influencing one another, right? Meaning, does my allowance have something to do with the way I'm pricing loans or the way that I'm evaluating the credit risk of loans? Are we learning from what we've done and what we are going to do based upon prior experiences? I think that kind of piggybacking on the analytics space, you're going to see maybe a different way of viewing capital management and strategy, particularly with the expected credit loss standards.
No, I think that is. We're seeing the world the same way. I think data is on everyone's mind. Sometimes in a scary way, and sometimes in an exciting way. But the use of data, the aggregation of data, the availability of data is very real today. In fact, it's probably too real, where everybody's sitting around scratching their head saying, what do we do with it all? I mentioned some of the fintech lenders, and I know I mentioned Cabbage specifically. If you haven't heard of them, they just announced they raised $250 million from SoftBank in Japan, and partnering with ING and other providers to be more of a platform within the banking space to offer small business lines of credit. But is it something like what they're doing, which Rob, their CEO, on a call about a year ago said, a question from the audience was, do you look at FICO score? His answer was not really. We link in with their bank account, and we look at cash flow, and we look at things like their UPS shipping history or their eBay seller rating. How do you use, whether it's data like that or some things that we're seeing in the future. Actually, we're seeing one of our clients today has been relatively aggressive in building out their own portfolio monitoring stress testing model by using their own data contained in their appraisals to be the real micro level trend setter for cap rates, rent growth, vacancy, because they're really conscious of managing their CRE to their CRE guidelines, and they view that as the most reliable source. So you take the data, and maybe this kind of brings the conversation together. You take the data that's available in the collateral due diligence piece, and you flow that back to the front end of the underwriting process. And could somebody walk into a bank looking to purchase a retail property, and real time there's portfolio monitoring going on, and interest rate changes, and how aggressive each individual bank's going to be because of their real-time portfolio analytics. So I think those are things that very, very few people are doing, but could be really cool stuff. I think some other things are more on the efficiency side of, you talked about departmental silos on the prior slide. There's thoughts around, many thoughts around the residential space, which I know we're talking primarily about commercial. Do residential appraisals even exist in the future? Is it just a property inspection? There's conversation around most homeowners are getting a property inspection, and then the appraiser's coming out and doing an inspection as well, but there's no communication between the two. Will somebody one day link those to eliminate departmental silos, eliminate duplicate work, and make the whole process more efficient? Not to mention the availability of other types of comparable sales data and market analytics, but our clients are really hyper focused on using data as a tool, and nobody's really hit the nail on the head yet. Using data as a tool to drive portfolio management and lending decisions, and I know that's been kind of the backbone of SageWorks on the private company data for a long, long time, but we're seeing it more and more on the collateral side as well.
Yeah, I would agree. I would agree with you entirely. I mean, I think just observing from our company and a lot of the conversations I've had, just spanning back over maybe the last year or two, a lot of the folks that are lending in that commercial real estate space, their examiners are starting to take notice. It doesn't mean they're at 300 to 100 capital limits and they have to stress test, depending upon their size or their scope. It's just that as these commercial real estate concentrations increase, so does the scrutiny and the need to be able to understand that, to be able to competitively and effectively manage those concentrations. And we're seeing more folks coming to us and saying, how can we do this? And, just like we were talking about the current state, yeah, I mean, we can link underwriting stress testing together so you can break those concentrations out and look at detailed underwriting and financial analytics. But you're right, that next wave is when not only can we combine all those financial analytics, but to be able to pull in real-time information to take that to the next level. I mean, you're spot on. I think it's not even a matter of if, it's just a matter of when.
Yeah, really cool. Hey, so we've got 8 minutes left. I'd love to open it up for questions. So feel free to submit your questions here on the message board. Just while people are sending those questions in, I'll also remind everybody that this presentation, we will be sending out a PDF version of the slides, as well as availability to listen to a recording. So I know from time to time we get that question. I will, as questions are not coming in yet, so if you do have one, please ask. I will make mention that here's some contact information. We've tried to be thoughtful to not make this a commercial, but my commercial for SageWorks is, if you're looking for some of this, a lot of the things we talked about, not all of them, they are experts on. We do have many SageWorks customers on the call as well from some of their other products. And then obviously, lots of people, since we're hosting this, are friends of Mountain Seed, but, at Mountain Seed we do appraisal technology, appraisal reviews, environmental database searches, and reviews as well. So if you need us for that, feel free to reach out. So I'm not really seeing any questions. I did see a comment from somebody early on about one of my questions to, why wouldn't somebody move to the new world? And her comment was, more of a statement. It's more the change management and cost of the effort. We do have a question that came in. You mentioned the great possibilities of the future, but how can we overcome the cost and possible lack of talent? So Bryce, so obviously the cost is a big concern for community bankers, and lack of talent, maybe, I'm assuming in the question, kind of running the platform as well. I know as you think about that, I know at Mountain Seed, the way that we think about it is the part of our mindset is the lack of talent is, whether it's in appraisers going out of the business or whatever, is what drives our business. So we recognize that most of our clients, it's hard to justify having appraisers on staff. The average staff member at Mountain Seed's 25 years experience, most are MAIs, and it just never makes sense for a banker to, most community banks, to have that level of staff, or they don't have them in their marketplace. So that's kind of the business process outsourcing piece of outsourcing that expertise. And then, cost, for the most part, our customers pass our fee along as part of the loan closing, so it's a little bit easier budget-wise. But Bryce, what about you? How can they overcome cost and possible lack of talent?
Yeah, that is a really fantastic question, and I hope that I can my answer will actually do justice to how good that question is. I think one of the things is lack of talent or even costs comes into play. The first thing that comes to my mind is learning how to institutionalize the process, meaning let's put it on rails. It's expensive to hire an expert, but it's even more expensive to pay less and hire an amateur that makes mistakes. So being able to put both experts and amateurs on the same space, on the same kind of what I'm going to call a workflow, right? That process management, that at least eliminates or minimizes the risk of costly mistakes. As it pertains to building up that talent, I think being able to put tools in the hands of capable people is one of the most important things. I've seen folks blossom. I literally can think of multiple different institutions I've worked with whereby individuals have come in with no banking experience. They're being taught by somebody that's been around the block a few times, and they're getting put on expert systems to begin with, right? And obviously through my lens, it's SageWorks systems, right? That's my exposure here. But seeing those folks come up and be able to learn from some of those things and actually stay competitive with technology. Technology is attractive to some of the talent that's out there. I can only speak for myself, but if I was to work at a different software company, I wouldn't want to go to one that has really old and boring technologies. I want to go to one that's actually enabling me to do what Carl said, which is focus on my areas of expertise. I think that is really kind of my best crack at that answer. Cost, truly, if I have to think of it this way, I would be looking at providers to start taking some of those costs and wrapping it in. I mean, I know that we're doing that today through the delivery of integrations with different systems. And from a forward-looking standpoint, I know this is a very long-winded answer, so I apologize in advance. Looking actually at profitability, I'm going to throw this out there, and it may give some of you guys an eyebrow raise. Starting to think about maybe the present value of cash flows from a profitability standpoint, as opposed to maybe the net income of cash flows over the next maybe 5 or 6 years might be something that you start considering. That's going to change the game in the way that you have access to capital, the kind of money you're making, and the way that you can strategically position your portfolio, your bank, and really your wallet to be able to make decisions on these kinds of tools that would enable your people.
Awesome. So that is we are at the end of the time. There was one last question though from a Mountain Seed client that I see in here about are there ways to connect the SageWorks program with the Mountain Seed program, and Bryce and I have been talking about that. So if that's of interest to you, feel free to reach out because I think there are some ways we can figure that out. But with that, Bryce, I'd want to thank you so much for joining us. I hope this was valuable to everybody. It's obviously something near and dear to our hearts, I think the biggest takeaway for me is as the world gains greater expectation for efficiency and a better customer experience, both internally at the bank or externally as a client, we all need to figure out how do we meet that demand. So I think you guys are doing a great job, Bryce, and really grateful for everybody's time. And join us next month. I don't know that we've actually rolled out who will be hosting, but we'll make sure we see you guys next month. Thanks so much. Bye-bye.
Thanks for having us, Carl. Goodbye.